Hey everyone, welcome back to Corporate Decoder, the place where we dissect corporate filings so you don't have to. Today we're digging into GameSquare Holdings' latest annual report, and let me tell you, this report is a mixed bag. It's like finding a $20 bill in your old jeans, only to discover there's a hole in the pocket and you've already lost half of it. We're talking about a company trying to connect brands with the ever-elusive Gen Z and millennial gaming audience. They own brands like FaZe Clan, Gaming Community Network, and others. Let's see what they're building and if it's on solid ground. GameSquare's mission is to revolutionize the way brands and game publishers connect with those hard-to-reach young audiences. They aim to do this through media, entertainment, and technology. They offer marketing and creative services, data analytics, and brand awareness through FaZe Clan. Let's dive into the numbers. Total revenue for the year was $96.2 million compared to about $41.3 million the previous year. That seems like a huge jump, but it is important to know that most of that jump is due to them buying FaZe Clan and Engine. Let's see where the revenue is coming from. Team revenue was $32 million, which if you remember is from the FaZe acquisition. There wasn't any the prior year since they didn't own FaZe yet. Agency revenue, which includes marketing stuff from Zoned and Code Red, was pretty flat at $12.1 million. Software as a service, SaaS, and advertising revenue, mostly from the Engine acquisition, nearly doubled to $52 million. This is where they make money from their data analytics and advertising platforms. Back in March, the company finalized its deal to merge with FaZe Clan, and they completed a private placement, basically selling stock to a select group of investors, raising $10 million, and previously had to create a backstop to ensure it was fully purchased. Now let's talk about expenses. Selling and marketing costs increased, but not by a crazy amount, up to $9.1 million. There was an impairment expense, which means the company had to write down the value of some of its assets because they weren't worth what the company thought they were. This totaled $12.5 million. It came mostly from their SaaS side, with Stream Hatchet and SideChat taking hits. The previous year, they had to impair the value of Frankly, another part of their business. These impairments tell us that they overpaid for some of their acquired businesses and are losing value. They also paid out $0.6 million in interest. They are not fully consolidating all of FaZe Media, and other part of the business they don't fully own is costing them money. We can see this in the net loss attributable to non-controlling interest line, which cost them almost $6 million in net income available to GameSquare investors. All of that combined to an attributable net loss of $48.8 million as compared to a $31.3 million net loss in the prior year. More revenue, but also much more cost to get there. Checking how much money they have, they ended the year with just over $12 million in cash. But look at this, they also have almost $6.5 million in convertible debt due soon. This basically means that current debts outweigh what they have in the bank. Now, GameSquare says they plan to raise additional funds. They need to, because they're burning through cash and they're not making enough money to cover their expenses. One important thing of note is that they do have an information security program and some coverage of their cybersecurity governance structure. GameSquare's Chief Information Security Officer, or CISO, briefs the management team every quarter. The audit committee at the board level oversees cybersecurity. They have unlimited shares authorized and no dividends are being paid. Now, what's interesting is what parts of other reports are incorporated by reference. GameSquare is leaning on their upcoming proxy statement for more info on directors, executive pay, and major shareholders. This means we will have to wait for additional details in a proxy statement to be filled later. GameSquare faces huge competition in the gaming world. They are up against other sports, entertainment events, and even just other video games. So they're competing for viewers and fans, plus they're in a tough market with other esports agencies and content creators. Regarding regulations, they say they make reasonable efforts to comply, but operating globally could lead to some fines. Adjusted EBITDA, which is a number companies use to try and highlight their business underlying profit, was negative $16 million. Now, let's step back and get a bird's eye view. GameSquare is definitely trying to grow and grab a big piece of the gaming market. FaZe Clan acquisition was a major move, bringing in a lot of new revenue and hopefully a bigger audience. The big risk here is debt and lack of profit. The level of loans they are taking isn't looking good if the plan isn't working. Another big weakness comes from impairments, as it shows that value is not being realized over time. GameSquare is betting big on the future of gaming and youth culture, but right now it is still losing money. GameSquare needs to prove it can turn revenue into profit. Thanks for watching. Hit like, drop a comment, and subscribe for more deep dives into the world of corporate filings.